Ladies and gentlemen, and again, it's Roadshow time. We are here in Zurich with Timmins Gold, and with me here is Bruce Bagagnolo. He's the president and CEO of the company. And as you already saw on Commodity TV, we have interviewed several times now, and I think your company is well known and good featured here. So, Bruce, we would like to have, first of all, thank you very much for taking the time. But first of all, we would like to have a short update on your company. So what have you achieved, let's say, the last quarter and the last year? Are you satisfied with the production, and what's going on in the cost situation?
Well, where do I start? The mine is running very well, and that shows a lot of it's as a result of the commitment of Arturo, who is my business partner on the company when we founded it. He's the president of the company, I'm the CEO. And he runs the operations in Mexico. So there's somebody on the ground in Mexico who lives there, who is fully committed to the operations. So it reflects the hard work that's gone into the operations over the last year. And when I say hard work, it's a 200,000 meter drill program. It's a crusher expansion. It's a constant fine tuning of the operations. And the production of free cash flow. Even though we're going through an expansion phase right now, we're financing everything from our free cash flow, and we're making money, and we're paying taxes. So things have gone very well for us in the last year.
I think you still have some debt left in the company, some 18 million, so 1.8. So what's going on with that? When will you pay that back?
Yeah, we owe $18 million to Sprott Lending. It's 8% interest, so I'm not particularly fussed about that. The plan right now is to finish off our capital spend, and then including the next phase of crusher expansion, which we're just waiting for the equipment all to arrive. It's mostly there right now. We're just waiting for a few final pieces. We'll finish off putting the crusher together. We will finish off the leach pad expansion, which is almost done as well, and we finished our drill program. We'll see how our capital spend has gone. We'll take out the bank balance, see how the cash balance looks, and at that point we'll come up with a final plan to pay off that debt. So it should be sometime very soon. We just don't have any exact plan for it right now.
So you're not in a hurry with that?
No, there's no rush, and it's a low rate. I'm more interested in our new mine plan that's coming out in July, and the drilling on our new target called El Durazno, which we're drilling right now. So, overall, we have a lot of very positive things going on. Crusher expansion, new mine plan, ongoing drilling. It's very exciting for the company right now.
Coming to your cost situation, as far as we know, on 14th April this year, the gold price really tumbled, and we are still yet back, let's say, between the 1350 to 1400 level. Can you still live with that? Are you still earning good money? What are your real all-in costs?
Yeah, our cash costs right now are about $700 an ounce. That's an accounting cash cost. The actual cost of production, including everything at the mine level, is about $800. So, our all-in costs are somewhere around $1,000. So we can produce gold right down to the $1,000 level if we had to. Yes, there's no doubt that the lower price of gold has certainly hurt the cream that we used to skim off the top. Hopefully, we'll be able to skim more cream in the future. But if your cost is $1,000 and you're making $400 margin, it's a lot less on a percentage basis than $600 margin was. So it's unfortunate that this recent drop in the gold price has taken a lot of that extra margin away from the producers.
So what is your production guidance for 2013 and 2014? Let's call it also that.
Yeah, for 2013, it's 125 to 130,000 ounces. And I believe that the mine plan is going to call, just based on some rough numbers that I've done, should call for about 140,000 ounces in 2014. And that should be fairly steady going forward over the next 10 years. So we'll see how that works out. We haven't published that yet. So it's not, our rough estimation is not 43-101 compliant, but I think that's what we're probably going to see in our new mine plan.
Okay, so coming to reserves and resources, you did a large drill program already, and I think you lifted up the mine life to 10 years now, roughly. Is that correct?
Well, we have to get the new mine plan out. If we're successful in converting the inferred ounces into measured and indicated, and I don't know if we have been yet. If we're successful in doing that, that's roughly what it should be. That was our plan going into this, into the drill program.
How do you rate Mexico these days as a mining location? Do you face any challenges, let's say political-wise, tax-wise, or labor-wise?
Mexico overall is a fantastic jurisdiction for any business. In mining, it's a great place to work. In Northern Sonora, where we are, the ground is nice and flat, which is a big advantage. And it's a state that's open for mining and open for business, very sophisticated business climate. On the taxation front, there's a straight tax on income of 30%, which every business pays. And there's some talk now about a mining royalty, which is supposed to benefit the municipalities in which mining takes place. I'm not against some form of payment to municipalities. The Mexican government right now is looking at the Senate level, they're looking at some way of analyzing this proposal to see how it makes Mexico look on a worldwide basis as far as competitiveness in mining. So that will be back before the Senate in September, and I believe that the mining industry will get a fair hearing from the government. And we'll see how that works out. But some decision will probably be made in the autumn of this year.
Considering your coming cash flow, that's the one thing which is quite positive. Well, anyway, even in this, let's say, low price environment, you still make some $40-50 million out of your production. Will you consider more like an acquisition strategy for the future, a growth strategy, or will you, let's say, grow more in the organical way?
Well, organic growth is preferable. It's the least expensive. So we'll see how things go at El Durazno, our target that we're very optimistic about. Apart from that, we've always got our eyes open. It's part of my job to assess strategy for the company. But as far as it stands right now, we have no plans really to do anything. We'll just continue with this drill program at our own organic target, and we'll see how it goes from there.
Are you considering a dividend maybe in the future?
I've always said that I'm in favor of dividends, but we'll have to look at the landscape when it comes time for that. We'd have to pay off our loan in any event. So right now, that's the first catalyst, is paying off that loan. Then we could have a real tangible strategy going forward for dividends.
So last question about the overall gold market, silver market. Where do you see prices move from the perspective as a miner? Not the perspective of a banker or speculator or whatever, just the perspective of a miner producing gold and silver.
Well, when we first started the mine, Artur and I had looked at a $425 gold price. That's what the price was at the time. We were looking at $850 and no more, because that was a previous high. We've been right basically every year for the last 10, 12 years that the gold price was going higher, and it has gone higher every year from the start of the year to the end. So I believe that we're still in a rising gold price environment. We've seen some very strong money at work to take down gold in the paper gold market. So we'll see how that works out. My own thought, though, is that a short squeeze is probably in the offing. We've already had a long squeeze. Now we might see a short squeeze as a bit of a pullback. So we'll see how it works out. There's a lot of big money involved, though, and a lot of big money that needs to make money. So they'll make money wherever they can, long, short. We might see a bit of a seesaw battle for a little while on that front.
What are the three most important targets you want to fulfill 2014 with Timmins?
Well, I think the first thing is to stabilize our production at a consistent 140,000 ounces a year. That's step one. Step two is to look at to assess this target we have 15 kilometers north. And step three is to do something that creates a lot of value for our shareholders.
Well said. Well, Bruce, so hopefully you will fulfill all those targets, and all the best for that on your path. And thank you very much for the interview.
Great. Thank you very much, Jochen.
Thank you. Yeah, ladies and gentlemen, you heard it. There are those 3 targets what Bruce said. He's very positive on the gold price. So do we. Timmins Gold, a great company, targeting 140,000 ounces of gold per annum, plus, of course, a lot of silver. And yeah, company is profitable in those days, very important. And he will consider, yeah, later, maybe hopefully from next year on in 2 years, a dividend. So watch out for the company. That was Jochen Steiger, Commodity TV, out of Zurich, out of the Timmins Roadshow. Thanks and bye-bye.